OpenAI is considering an IPO in the second half of 2026 or 2027, according to reliable sources. This follows comments from Sam Altman, who said, "An IPO is the most likely path for us given the capital needs that we'll have and the size of the company." In today's episode, we'll set the stage for what would likely be the largest U.S. IPO in history, with broad implications for AI and future IPOs. In IPO Radar news, Medline is moving forward with its IPO, Grammarly is Now Superhuman, and whatnot. Welcome to the Access IPOs podcast, where we explore opportunities to invest in the world's most innovative and disruptive pre-IPO companies. I'm Craig Stevens, founder of Access IPOs, and what company embodies disruption and innovation more than OpenAI? On Tuesday this past week, we got big news out of OpenAI that they've completed their corporate restructuring. OpenAI was founded as a nonprofit, but created this for-profit subsidiary in 2019, and there's a complex web of things going on there that most of us don't understand. The lawyers have been working on it over the past year, especially with Microsoft, because Microsoft made a big investment in OpenAI a few years ago, and so the lawyers needed to come to terms with a new corporate structure that would work with the Microsoft people and current investors, and be a future structure that would allow OpenAI to fulfill its ambitions. And part of that journey is likely to be an IPO. At a $500 billion valuation right now, and plenty of money still needed to raise in the next 5 to 10 years, there may not be enough private capital out there to really fulfill what OpenAI is trying to do and all the partnerships they have. So at some point in the last couple of years, Sam Altman and the board of directors have decided or realized that they need to eventually be a public company to be able to tap the public markets for capital. OpenAI is now a for-profit corporation nested inside a nonprofit foundation. 26% of this company is owned by this OpenAI foundation. 27% is owned by Microsoft. That values Microsoft's stake at about $135 billion of the $500 billion total valuation. And that leaves about 47% ownership in the hands of current investors and employees. Now, all this legal wrangling and terminology, I don't really understand it and I don't really care. What I do know is that this new structure allows the company to move forward with its growth and, even more importantly, with its IPO, which we weren't always sure that OpenAI was headed toward an IPO. In fact, Sam Altman said years ago that he thought an IPO wasn't a good idea, but part of that was tied to the strange corporate structure that they set up back in 2015, which he did, by the way, with Elon Musk. Elon has been fighting this new change to the corporate structure, and it looks like there might even be some more legal wrangling with him and his attorneys. Of course, OpenAI is a competitor to Elon's company, xAI, which is worth about $200 billion on its own right now, and maybe he sees OpenAI as a public entity being a competitive threat to xAI, or maybe Elon just doesn't want to go public with xAI, and maybe he'll feel like he'll need to after this. So on Tuesday, this news came out about the restructuring, and there were a lot of articles about it, and it's kind of confusing and doesn't really make a lot of sense to most of us, except for that bottom line that it does allow an IPO. And some of these articles that came out were starting to drop IPO in the article title and inside the article. One of them from the Wall Street Journal said OpenAI's promise to stay in California helped clear the path for its IPO. And in that article on the 28th, it does mention that OpenAI could go public as soon as 2027. And that statement didn't get a lot of attention. There was another article that said OpenAI's restructure paves the way for an IPO and AI spending spree. That one was from Bloomberg. There was an article from TechCrunch that came out and explained some things. So lots of details on Tuesday and Wednesday that came out regarding this restructuring. But what was sort of unnoticed was this live stream that Sam Altman did on YouTube. And about the 1 hour mark, a listener submitted a question about IPO potential. And Sam was pretty quick to respond. Sam said, in regards to the question about the IPO, "We don't have specific plans or know exactly when this is going to happen, but I think it's fair to say that this is the most likely path for us given the capital needs that we'll have and the size of the company. But that's not a top of the mind thing for us right now." And so that statement from Sam coming out on October 28th is a change. That's a reversal from what he has said in the past. He sees this for-profit transition as an opportunity to eventually take this company public. Now, back in 2023, he was speaking about an IPO differently. In June of 2023, he said, "When we develop super intelligence, we are likely to make some decisions that most investors would look at very strangely. I don't want to be sued by the public market, Wall Street, etc. So no, not that interested in an OpenAI IPO." That was from Sam Altman in June of 2023. Now, what's changed? Of course, the corporate structuring has changed, and that now paves the way for them to IPO. And the company is much larger now. Back in June of 2023, the company was valued somewhere between $28 billion and $86 billion. There was a tender offer in October of that year of $86 billion, and in April, there was a round or a tender that took place at about $28 billion. So I think the valuation was probably about $50 billion when Sam said that an IPO was not that likely in their future. He's obviously changed his tune here because at this stage, the company is now worth $500 billion, and he realizes how much money he's going to need to raise to accomplish what they're setting out to do. So after Sam made these statements and after the Wall Street Journal report, and all this news is simmering about this restructuring and some talk of IPOs in there, late Wednesday afternoon, we got an article. It says here, OpenAI is laying the groundwork for an initial public offering that could value the company at up to $1 trillion. 3 people familiar with the matter said, and what could be one of the biggest IPOs of all time, that's for sure. OpenAI is considering filing with securities regulators as soon as the second half of 2026. The company has looked at raising $60 billion at the low end, and likely more, the people said. They cautioned talks are early and plans, including the figures and the timing, could change depending on the business growth and market conditions. This was a bombshell. Reuters coming out and saying that next year we could get an OpenAI filing, it says. It doesn't necessarily say the IPO is going to happen, but it does say the filing could happen, and that could mean a confidential filing. They may file confidentially with the SEC. Earlier this year, the SEC got rid of the whole threshold for companies that are eligible to file confidentially. It looks like OpenAI should be able to file confidentially, and that may happen by the end of the year of 2026. And with this complex corporate structure, with the size of the IPO, and with the media fury and investor frenzy that could happen with this thing, the SEC is going to take an extra hard look at this filing and probably provide a lot of feedback, and there'll be a lot of back and forth. So realistically, I think we might see a report of a confidential filing by the end of 2026 or in the second half, just like they said here in the report. But I think realistically, it might take until 2027 to actually get this deal out the door. And that's what we got from the Wall Street Journal saying 2027. And even in this Reuters article, it says Chief Financial Officer Sarah Fryer has told some associates that the company is aiming for a 2027 listing, but some advisors predict it could come sooner, around late 2026. A spokesperson said an IPO is not our focus, so we could not possibly have set a date. We are building a durable business and blah, blah, blah. So this is an extraordinary report coming out of the Wall Street Journal and Reuters, and Sam saying it to the public himself that an IPO is the likely path. And the implications for this, I think, are bigger than people realize. This would be the largest IPO of all time, at least in the US. This deal would raise $60 billion. They're already talking about $60 billion. So that's 3x the largest IPO raise in previous history. OpenAI, this would be a $1 trillion IPO, assuming the market stays stable and the company's growth trajectory doesn't change. So that's significantly larger than any previous IPO. That could mean incredible participation from individual investors and institutional investors. It means it could take extra time to get this thing filed and out the door. It could mean dozens of underwriters and book runners to make this thing work. And imagine the bankers are going to try to get that deal. So there's this incredible IPO, the most innovative company out there, which has launched us into this age of AI. The implications are going to be massive, on top of just the size of this thing and the institutional money that would go into it and the opportunities for individuals to maybe participate in the IPO and to invest for the long term in this company. Every other company that's private would see this leading AI company going public and say, well, we need to go public too. If Sam's going public and we need to keep up with Sam, we're going to go public too. That's my hunch, is that there's a possibility that this IPO could reverse the whole staying private trend. If Sam and the most innovative AI company on the planet go public, then why wouldn't Hugging Face want to go public, and Crusoe and Lambda and Grok and Anthropic and XAI? Especially those two, Anthropic and XAI, would need to keep up with OpenAI, their competitors. And with OpenAI going public and having access to that public capital, it's going to make it easier to make acquisitions to grow, to raise substantial capital like that $60 billion, possibly even $100 billion. I mean, who knows at this point? So for competitors to keep up, they may need to follow Sam and company into the public markets. As an individual investor, as a retail investor advocate, I love this deal because we want to see the most innovative companies in the public market so we can invest in them directly or get them into our index funds. Think about where OpenAI could be in 20 years, what its valuation could potentially be. I don't know what it's going to be, but I want to be able to participate in that growth. And I want to participate in all the growth of all these potential private companies that have been just staying private for longer, and the explosive growth happening in the venture capital world, but not happening in the laps of retail investors. And I think this all traces back to the mission of OpenAI, which says our mission is to ensure that artificial general intelligence, AGI, AI systems that are generally smarter than humans benefits all of humanity. And when we talk about all of humanity, I mean, that's an opportunity to let humanity benefit from the incredible economics that have already been created, but could potentially be created by AGI in the future. And the retail investing community can't really be a part of that if it's just going to stay private for the next 20 years. So we want to see it public for so many reasons. Not only can we invest in this company and then let the markets give it a true valuation, because these private valuations are all over the place, right? It went from 300 billion to 500 billion. And is it really worth that right now? And the only way to know is to let the market decide. And so watching SoftBank invest at a $500 billion valuation up from 300 billion, we know that that's not an efficient way for this thing to be priced. So the only way to efficiently price these companies is to get them public. If OpenAI leads the way, that could lead to the Databricks and the Stripes and the Anthropics and the XAI and the SpaceX. These mega companies that are staying private could get those companies into the public markets where all the money is, and certainly where retail investors are. So that's the implication I think could happen with this OpenAI IPO. But there's some massive caveats to think about when I say this. Yes, I am enthusiastic about this. There's certainly some questions about the business model, and especially making $1 trillion worth of deals with various partners and the circularity of some of their relationships. So there's a lot of questions about this business model. If there's an AI bubble, does that $1 trillion market cap hold? Probably not. If there's not a bubble and there's still a lot of growth ahead of us, then maybe it's higher than that. So I encourage investors to read both sides of the story, both the positive cheerleader stuff that mostly you hear, also some of the criticism of AI, and especially Sam and OpenAI. There's a blog and a podcast I like called Where's Your Ed At? This guy's Ed Zitron. He's very critical of OpenAI, and he puts out very well thought out arguments backed with data saying why this is completely unsustainable at the pace that AI processing and energy and everything that goes into making this all happen, how the math just doesn't add up. So I am a cheerleader. I want to see this company succeed and go public and change the world, which it already has. But I am not convinced that this is a $1 trillion company today, even though I think the markets would value it at that. I'm not convinced that that would hold. So still a lot of questions with building out the processing and the chips being available, especially with video and how that's taking up more processing, the energy that's required to make this all work. I live in Northern Virginia, which is a central hub for data centers, and our power bills are going up because of all this data processing that needs to happen. And we know that a lot more has to happen, a lot more infrastructure has to be built out, including nuclear power and more sources of energy. And so while AI is this juggernaut going straight up, we know that long-term trends don't continue to go straight up all the time. So there's going to be some bumps in the road. If that were to happen next year, either the market reverses or AI growth slows down, that could certainly impact OpenAI's IPOing ambitions. I do think that they want to get it out on the sooner side while we're in this growth trajectory, so that when bumps in the road happen from whatever black swan is out there we don't know about, it's already public and it's not waiting for several more years to go public and to access that capital available out there. So I like to think that OpenAI is thinking about all of humanity in terms of all investors who could participate in the growth of their company, in addition to what they're saying about AGI and making humanity better through technology, artificial intelligence, and unlimited intelligence for everyone. What should we look for next? More statements about a potential IPO. Maybe OpenAI starts hiring bankers or starts interviewing bankers for who they might partner with to take their company public, and just more reporting on this topic. And I think we're going to get a lot of it. We've got some Reuters and some Wall Street Journal reporters investors getting tips and scoops out of there. And I'm willing to bet some of the OpenAI employees who are dishing out these scoops are either doing it because Sam wants it out there, or they want it out there because people want to see this company go public, especially employees. They can realize the value of their shares based on a market price and not some arbitrary price put together by a few private investors like SoftBank and the board of directors at OpenAI. So we'll watch for talks about hiring a bank or who they might have a relationship with to lead the IPO. Hopefully they're going to provide a discount for their services since this is going to be so big. Then we'll look for more reporting to see if there's any more scoops about them moving forward in this path to an IPO. And then I think it would also be helpful for some other companies to go public and just to see the pipeline be healthy over the next year. We want to see a constant flow of high quality IPOs coming out. And that's what we are expecting in 2026. There's a lot of companies who are lined up to go public and planning to go public in 2026. And as long as that flow continues, that pipeline is open, I think OpenAI will see that path open for them and move forward, but probably not until 27. If I had to guess, these IPOs tend to take longer than shorter. If a company comes out and says they're going to do it, it usually takes longer than what the initial timeline is. So my guess, 2027, but man, I would love to see it next year, and it'll probably make my list of upcoming IPOs for 2026 as a fingers crossed sort of wish list item. Let's move on to IPO Radar news. I thought IPOs were done this year due to the government shutdown. I've been proven wrong, and I'm happy about it. We have Navan. The IPO is today while I'm recording this, October 30th. I haven't checked to see if it's open for trading yet. I don't think it is. Next week, we have Beta Technologies. These are two that have been radar companies out there for a while that I've been talking about. So both of those are going to get out the door. And we have a few others in limbo still that filed for an IPO but haven't updated the terms. And so we're not sure if BitGo, Wealthfront, or Once Upon a Farm are going to move forward with their IPOs or not. Maybe they're waiting for Navan to go through and see how that goes. Maybe they're just going to push to 2026. And I still think plenty of companies are pushing to 2026. But another company filed for an IPO this week, one that we were hoping for. And it turns out they've decided to move forward. And that is Medline. Medline is going to be the largest IPO of the year. And so it's great to see this company moving forward. It's a 6-decade-old company. It's a surgical and medical equipment maker and product maker for hospitals. So if you go to the hospital and you need a gown or you need a bra or something like that, or underwear or gloves or masks, they have something like 190,000 Medline branded products. And they also operate a logistics and supply chain network. So this company is manufacturing and distributing equipment, and they're also distributing equipment for third-party providers and manufacturers. They compete with already public companies, Cardinal Health, McKesson, Owens & Minor. This is a well-established business, goes back to 1966, and a family called the Mills family has owned this for all this time. It was actually public for a few years in the 70s. It went private again. And then in 2024, it brought in private equity stakeholders and operators who can take this thing public. Carlyle, Hellman and Friedman, and Blackstone. This was going to be the focus of the show this week, but with this OpenAI news, I had to take a back seat this week, but I'll be back with a Medline IPO preview episode within the next few weeks, hopefully, unless something else that's newsworthy explodes. Medline still has to update their terms, and when they do update their terms with an updated amended filing, that kicks off that 20-day period set forth by the SEC regulation. So once we get that amended filing, kicks off a 20-day countdown, and then at some point in there, the IPO roadshow starts, and we'll be able to start indicating interest, assuming it's going to be at some of the brokers where we have IPO access. This Medline deal could be a $50 billion market cap, raising $5 billion. So very significant deal for 2025. Looks like it's going to move forward whether the government opens or not. I suppose if the government does open between now and 20 days from now, it could complicate things. In the meantime, take a look at that S1 and I'll walk through it in the next show or two, highlight some of the cool things I found in that document. Next up is Grammarly, which has now rebranded to Superhuman. Go to superhuman.com and you'll see this new company. Grammarly is a software that I use every single day of my business. It's like spell check on steroids. It pretty much, anything I write, I put into Grammarly and it gives me grammar help. It finds things that are wrong, commas, certainly misspellings, but it can also generate text. It's very good at picking up passive tense and just various things with writing. It improves the quality of my writing. And since I don't have an editor, editor, my editor is Grammarly. So this is a tool I've been using for several years, and I use it every day that I'm working. I certainly recommend it. It's a great tool. But Grammarly was the name of a company that has since rebranded, and they're calling themselves Superhuman now because they bought a company called Superhuman, which was an AI email type of software. And I guess maybe part of that deal was they like the name Superhuman. So Superhuman now has 4 product lines under the Superhuman brand. The first is Grammarly. And this is a SaaS. I pay a subscription for Grammarly. I think it's about $139 a year and worth every penny. They also have the Superhuman email. Then they have a product called Coda, which is an all-in-one AI workspace for teams, and Go, which is a productivity add-on app of some kind. Looks like they launched Go back in March of 2023. And so it looks like there's been this strategic move to make some key acquisitions in this Superhuman AI world that everyone wants to rebrand to AI, and it looks like they're actually doing it, and it sort of plays into the AI trend without saying they're AI, and it's not a .ai, it's actually a .com. They're not getting rid of the Grammarly brand. That's a pretty good brand name too. It tells you about the product before you buy it. In my view, this is a great rebrand in the AI era, a great URL, great name, good branding. So congratulations to Grammarly on this great rebrand to Superhuman, and we'd love to see you in the public markets in the next few years. One more story this week in IPO Radar news, and it's about a company called Whatnot. And this is a company that I've written about in the past. Hasn't really come up on the show, and honestly, there's not a lot of news about this company, and I don't hear about it in pop culture, but apparently it's a thing. Whatnot is essentially the QVC of the mobile internet era. Creators who have products can go on there and sell their own products. So if you design a product and you manufacture it, you can go on Whatnot and sell it live. And this whole idea of live is becoming more of a trend because when something is live, it can't be AI generated, especially when it comes to vertical short form video. So much stuff, people might call it slop, and OpenAI is behind a lot of that with Sora. But in a world where AI is infiltrating live, genuine contact through our mobile devices is what a lot of people are craving. Whatnot has secured an $11.5 billion valuation. This is the live shopping app. I'm looking at the Business of Fashion website, and it says here Whatnot, the live shopping startup on Tuesday announced a $225 million Series F funding round as the platform's GMV, I'm not sure what that stands for, but as their GMV has doubled in 2025. The round was led by DST Global, a very prominent venture capital company, and Capital G, which is owned by Google's parent company, Alphabet. The company's valuation has more than doubled in the past year. It raised $265 million at a nearly $5 billion valuation in January. And I did see that article, but that was before the podcast started, so I didn't really report on that. Prior to that, there wasn't a lot of news around this company. The 6-year-old company allows small businesses to sell through live streams on its app and has emerged as a TikTok rival. Gross merchandise volume, that GMV acronym, a measure of sales done on its platform, has more than doubled to $6 billion in 2025. So a nice growth update from an IPO Radar story that isn't a household name and doesn't get a lot of attention from me on my website or on Twitter or anything. It's just not a company I pay attention to a lot, but it's making some waves, doubling its valuation after raising a lot of money. It's a rival to TikTok, and it's meant for selling goods directly on the platform. It's not about cat videos or dumb dances or lip syncing. This is about salespeople getting out there and selling their products that they care about. We remember back in the 90s how QVC and the Home Shopping Network were such popular TV channels. They sold so much volume, and it really blew the mind of a lot of us who didn't watch daytime TV. Whatnot is the modern version of QVC. And I think a lot of people are craving an alternative to TikTok. I mean, you've got the YouTube and you've got Instagram and Facebook Reels and whatever's out there. But Whatnot is an app meant for selling and meant for buying. So if you're an impulse buyer, that might be something you're attracted to. If you're a good salesperson, you could sell your own products, or you could sell products for companies. So if you're good at this, you could be like a designated seller, kind of like the way QVC used to be, where they'd have sellers who were just very good on screen and could make a sale. In an age where anybody can manufacture something in China and get it shipped over, or people can make things in the US and sell them with these online tools we have. This is just another one where people can become self-employed and do something that they're really passionate about. And so I always applaud these kinds of social networks that empower entrepreneurs, similar to the way something like a Grammarly empowers me to be a writer and has empowered me for many years, and how YouTube empowers creators like myself and others to make a living doing something they really love through the power of the internet. So Whatnot, another social media company that is potentially on a road to becoming public, similar to Reddit and Discord, which is in the pipeline, hopefully, a social media company. And we know that social media is addictive and it's a great business model. So Whatnot could be on the road to an IPO after this fundraise. We'll see how they execute after raising this much money and where they end up a year from now and 2 years from now. And if we start getting any reports of this company moving closer to an IPO, we'll be keeping an eye on things there. That's all for the show. Thanks for tuning in this week. Keep an eye on the flow of IPO volume happening over the next couple weeks. We might get that Medline deal before the end of the year, and we might get surprised by something else that could show up before the end of the year. A source of mine says this is not over yet. The IPO season isn't over. There could be more. If you want to stay on top of that, subscribe to my newsletter. It comes out every Sunday. You'll never miss an episode of what I talk about here. And if you don't have time to listen to the show or watch the show, you can get a quick update in that weekly newsletter on Sunday. So go to accessipos.com and sign up for my newsletter. You also get a free download, a one-pager PDF that talks about how companies go from the very early stages of a startup to an IPO, sort of that road to an IPO. Free download when you sign up for my email list. If you really want to pay attention to what's going on and up your game when it comes to these IPOs and know what other investors are doing in terms of how they're requesting shares and getting allocations from the various brokers that are now offering IPO access, join the Access Club. That's our Patreon membership group. It's exclusive to viewers of the show and email subscribers who want to interact with other like-minded investors on that platform. We chat about upcoming IPOs. There's a chat right now going on about Navan. I post at least 2 or 3 times a week about upcoming IPOs, news stories, and also opportunities to invest pre-IPO on the various pre-IPO marketplaces. And anytime there's big news like this OpenAI news, I like to get that out there as soon as I can because I know our members are really keen on that company. It's also a place where you can interact with humans and not bots. Everyone there is a human. We don't allow any bots in there. There's no AI slop. And if you want to connect directly with me, that's the best place to do it. Go to patreon.com/accessipos. Or if you just go to accessipos.com and look for the red star up in the menu, click that and it'll take you there. There's a 7-day free trial for everyone who joins. So if you just want to snoop around and see what we do there, that's fine. Hang out for 7 days and then take off. Or like most people who join, they find a lot of value and they end up sticking around. It's only $5 to join. The other tiers are $10 and $25. You get some extra perks and a little more direct access to me. That's all for the show. Thanks for listening. Thanks for watching, and I'll see you next week. This video is not a recommendation to buy or sell any startups mentioned. Pre-IPO and IPO investing involves significant risk. Conduct due diligence by reading the SEC S-1 filings before participating in IPOs. Do not invest in IPOs with money you cannot afford to lose. Thanks for watching.